Good morning. I hope you're doing well and welcome to today's edition of 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. I just increased the volume. I did get some feedback from you guys that the microphone sometimes is a bit low. Let me know what you think about this. We are live as we usually are at this time of the day. Sometimes, of course, we start a little bit later, but most of the time we start at this time of the day. Okay, so let's get going. But before we start, as always, I need to stress that trading financial markets unfortunately is risky. We can make money, we can lose money, and we need to bear that in mind. Never risk too much money that you can't afford. If you do that, then yeah, there's not too much I can do about that. But I can highlight the risks of investing and trading. So click here on risk disclosure statement and read more up about that. And today, special webinar coming up this afternoon. Nathan is going to talk a bit about his experience when he was trading at a hedge fund. He did that for about 3 years, I think 3 or 4 years, I don't know exactly. And he's going to talk a bit about that. This guy was making money by trading the money of this fund. And obviously if he would perform, he would get paid. If he didn't perform, he would get less of a pay. So we're gonna learn more about that today. That's gonna be at 1 p.m. London time. So make sure you join us for that. I'm definitely gonna watch because I definitely want to see, learn more, really, see if he can teach me something when it comes down to trading. As well, don't forget to check out the daily technical analysis updates. Nathan has already updated the section here. And he will continue to provide more updates throughout the day. Okay, let's begin. So everybody knows what's going on with Italy, right? The situation in Italy is not good, and you have a situation where bond yields are just through the roof, and if this continues, it becomes just more expensive. So last time I checked, the yield to borrow money for the Italian government is about 3%. So it's not necessarily terribly bad. I mean, they're gonna be able to make it without a doubt. But it's when the yield starts to push higher. I think 2012 or so, the yields were close to, I think pretty much, I think about 7%. Let me just go to my Twitter and let me pull out that chart. So this is just the difference, though, between Italian and government bonds yields. Okay, so right now, Germany, to borrow money for them over the next 10 years is at 0.2% to 0.25. So 0.25% for them to borrow money. A brilliant opportunity to borrow money for the long term, invest that in whatever the country needs. In Italy, as I said before, their rate is about 3%, and the difference between the yield what Germany pays and the yield that Italy pays is what we call the spread, and that spread is at 3 right now. It sort of depends where you're looking, because yesterday I was looking at it, it was much higher. But key point here is that this thing just went straight up, and obviously if it goes up to a yield spread of 5%, that could be an issue. But at the end of the day, who cares about what's going on in Germany? It's about the yield, the way the level where it's at in Italy that matters. And imagine you borrow a lot of money on a credit card. I think credit card interest rates are about maybe 15-20%. So obviously if you borrow a lot of money on that, at the end maybe your income is just going to cover the interest rate, so you don't actually you're not able to pay back the principal. That's when you get in trouble. Or when you can only pay parts of the interest rate, so you need to go and talk with them and say that, I can't pay back everything, and then they say, okay, no worries, whatever you didn't pay, we add that to the principal, and then eventually that just spirals out of control because you don't have enough income to pay for the interest rate or the principal. That starts to happen when the yield starts to move up, maybe 7% or something like that. Obviously, it depends on all countries because it depends on how much tax money they can raise. So what happened here is that this spread was very narrow, maybe more narrow than it should have been. It should have been higher, really, to begin with. But the way we have a trend, so the euro is going down, down, down right now. But imagine a few months ago it was going up, up, up. It went from €1 dollar was pretty much one, went all the way up to what is it, 118, 119. So the same way as you have trends in currency markets, you'll have trends in bond markets. So I think everybody got very complacent, and they were like, all right, interest rates, yields in Germany are pretty much zero, and in Italy you get 2%. So they would buy these bonds, and then suddenly a lot of people realize that this is something that can cost them money, and they reduce their exposure, and this causes the push to the upside. Now, the great benefit of bond yields is that you could lend money to the Italian government today for 5 years, and who think the Italian government is going to default within 5 years? That's probably unlikely. Of course it could happen. So the benefit of a bond yield is that you know that by the end of the period you're going to get your money back. So some people looking at this and say, all right, I can get some decent return here. You can get, I would need to check that out by the way, but say you get 2-3% per year, and then within 5 years you know for certain that you're gonna get your money back. So most sort of professionals, they think that things will calm down, and they're looking to get involved on a dip to buy these assets which have come off. Is because they know that by the end of the period, as long as the Italian government does not default, they will be most likely able to get their money back. For now though, it's all about panic. People are worried, people are scared, so the euro is moving to the downside. And technically the trend is bearish below 117.57, which is just above this double top. And I just took a simple fib from this high to this low, and as is common, the market will move back maybe 50%. You can add as well, I like to use an exponential moving average. This is a 5-day exponential moving average, but it's displayed on the 4 hours, so it's still a 5-day moving average, and it's pretty much at the 50% correction level. And I think that up here traders will be more willing to sell from starting from this level all the way up, because if they short, they risk about 132 pip. If we move back to the low, they make 116, and if we continue to move to the downside and reach the June 17th low, they could potentially make up to 178. And remember, I'm not just bearish today, I've been bearish since up here at 121.50. So I'll be bearish, and yes, in my monthly update I thought the market would just reach 1750-ish. But the market continued to move to the downside, so it continued to climb more than I thought it would do, and we just need to stick with the trend until proven otherwise. Here's Bitcoin, and here the trend as well is bearish. I do know we had a bit of a jump, but the technical trend is bearish. It is bearish, and check out the May 25th high, and yeah, we'll probably push to the upside. Alright, and then we'll see what happens, but I would guess that maybe the market, if indeed bottomed out here, that is probably gonna trade sideways here for longer. So my longer term view, what I shared with you guys over the last few weeks and months, has not changed, and in the short term the trend remains bearish still, and as long as you're below the May 25th high, I think this can go to the downside, and I've been bearish since the price took out this level here. Here's crude oil. Crude oil, big sell-off. Of course everybody was long, everybody thought it was gonna go much higher, and they didn't. Well, it did go up quite a bit actually before it tumbled. It needed to correct. Technically here we have the first bearish leg. I think we're gonna have another bearish leg, maybe down to 63 or 61.8, which is the April 6th low. But how can we trade this then? Well, I think if you're not short, traders will probably see this, and we'll probably go up to maybe 68, 58, maybe all the way up to 70.4, sorry, 17.14. But here I suspect the market to roll over and then touch the low. and then we'll see if it takes out the low. If it takes out the low, then yeah, we'll probably go lower like this. Bit tricky situation, but the trend is definitely bearish, and I want to continue to be bearish as long as trade up below 71.17. Here's the price of gold. So you know I've been bearish for quite some time. There's no real reason to change the bias here. We turned bearish already on the break to the downside. It's gone up, tested that, and it's probably going to continue to go lower. I see no real reason to change the bias. If we take out yesterday's low, push a little bit lower, we should be able to reduce the stop loss from this high to this high up here. Here's the German DAX. A bit of a tricky situation. The market, as you know, I was bullish, but I got stopped out already here on the 24th as the price traded below this weekly low. I don't really know exactly what's going to happen, but I know people are afraid about the situation in Italy, but maybe this is it. I think that for now, no point having a very strong view, but could potentially bounce up to 12,814, 12,900. So could potentially bounce up to this little area here, but as long as it's below 13,034, I suspect we're probably gonna try to revisit the low and maybe do something like that, but I'm not aggressively bearish here. Okay, so if you look at dollar yen, it looks like something similar like this. Pound yen, euro yen, all bearish. And if you believe that the situation in Italy will worsen, then that's really what you want to be looking at. Okay, let's just see if we have any quick questions. Otherwise, we're gonna wrap things up. Okay, so we don't have any questions. I want to thank you so much for joining me this morning. Don't forget that if you want to participate, you just need to be signed into YouTube. If you're watching the recording or watching it live, don't forget just to hit that like button down here. And as well, we have technical analysis in this section here. You definitely want to check it out. Don't want to, make myself bigger than I am, but over the website. But as I said, Nathan has been trading professionally, so it's definitely good to check that out. I've been trading since 2006, and I'm profitable in my trading. So I think it's well coming back for you guys here. If you want to learn more about how to trade from people that actually make money trading, and not just journalists and journalists, I would say that. Nothing bad with journalists, I have a lot of good friends, but it's different if you report the news and different from trading. It's a big difference. In fact, if you would have followed, say, CNBC, then they showed you how to buy Ripple pretty much at the very top of the market. News are great because to tell you what's happening right now, but you're not going to make money if you just look at the present, at now. I mean, there are benefits of trading the present and now, but it's always good if you have a little bit of an idea what might happen to the future. Like what can happen, what's the result of the news, what may happen following this. That's really what is important, because if you're always just staring down, like imagine you playing football or ice hockey or something, if you're always just looking down at the ball or the puck, it's going to be difficult. How do you win then? Well, you need to look around, you need to see where the other players are. Where's the goalkeeper? If you're playing football, where's everybody else? What's the speed, what's the momentum? That's how you win, not just by staring down at the football. And it's the same thing here. The news is staring down at the football and telling you what's going on. The ball bounced, the ball got, someone struck the ball. Same thing with markets, or same thing with news. And I think that's really what I show you here, is how you can prepare. You do the scenarios with your technicals, and then you just wait for the price to pull back to your levels, and then you pull the trigger if you think that the scenario still makes sense. Okay, have a good day, and I'll see you guys tomorrow, same time. Thanks.